Welcome to the LatinoTaxPro.org presentation on home foreclosure and debt cancellation. My name is Carlos C. Lopez. I'm enrolled to practice before the IRS, and I'm the president and founder of the Latino Tax Professionals Association. What is the Mortgage Forgiveness Debt Relief Act of 2007? This law was enacted on December 20th, 2007, and it generally allows the exclusion of income realized as a result of modification of the terms of the mortgage or foreclosure on your principal residence. Usually, debt that is forgiven or canceled by a lender must be included as income. The Act allows you to exclude certain canceled debt on your principal residence from income. Does the Act apply to all forgiven or canceled debts? No, it doesn't. Only to forgiven or canceled debt used to buy, build, or substantially improve your primary residence. This includes refinance debt for these purposes only. Debt used to refinance your home qualifies for this exclusion, however, only up to the extent to the principal balance of the old mortgage, immediately before the refinancing. It applies to qualified debt forgiven in 2007, 2008, and 2009. The Form 982 has many purposes and is quite complex. Some of the purposes are for insolvency, qualified farm indebtedness, qualified real property indebtedness, and qualified personal property indebtedness. If only reporting the exclusion of forgiveness of qualified principal resident indebtedness as a result of foreclosure on your principal residence, you only need to complete lines 1E and line 2 on Form 982. Here's an example. Your home costs $500,000. The balance of the principal is $480,000. However, the fair market value is only $280,000. If your home is foreclosed, you will have $200,000 of taxable debt. However, because of the Act, you check line 1E and you fill in on line 2 the $200,000 of the discharged income. Remember, again, this is only on your principal residence. As a result of foreclosure on your principal residence and/or a modification of the terms of the mortgage, then you must complete lines 1E and 2 and 10B. How will you know how much was forgiven? You should have received Form 1099-C by January 31st for the prior year. The amount of debt forgiven or canceled will be noted in Box 2 of the 1099-C. If qualified debt for the Act, this amount is the form that you enter on lines 2 and 10B on Form 982. Here's an example. The cost of your home was $800,000. The balance of the principal was $700,000. The bank modified your loan by $200,000. Therefore, your principal now is only $500,000. However, the fair market value of your home is $400,000. So the amount that was discharged in debt is $300,000. The difference between the $700,000 and the $400,000. Line 2 will show $300,000 and 10B will show $300,000. You may not exclude debt forgiven on second homes, credit cards, or car loans. Only canceled debt used to buy, build, or improve your principal residence or debt incurred for those purposes qualify for the Act. There are other provisions underneath the Act and may qualify under the insolvency exclusion. A taxpayer is insolvent when his or her total liabilities exceed his or her total assets. The taxpayer may qualify if debt was discharged in a Title 11 bankruptcy, if qualified farm indebtedness, or qualified real property business indebtedness. Here's an example of cancellation of debt. The released credit card debt is $5,000. The taxpayer's fair market value of his or her assets is $7,000. The taxpayer's liabilities were $10,000. As you can see, since the liabilities exceed fair market value of assets by $3,000, the taxpayer is insolvent by $3,000. You would therefore check the box on line 1B of Form 982 and enter the $3,000 on line 2. The $2,000 difference is not taxable, but you need to include all the calculations as an attachment to Form 982. However, the $2,000 may be taxable. There is no dollar limit on the amount of forgiven qualified principal resident indebtedness as long as the principal balance was less than $2 million or $1 million if married filing separate. If greater, follow the instructions on Form 982, page 4. Rentals or second homes do not qualify for this provision. The loan balance or fair market value become the selling price. The gain is reported on 4797 and a 1099-A may be issued. Here's an example. Purchase your property on 5/1/05 for $300,000. Your depreciation was $5,000. Your adjusted basis was $295,000. The loan balance as of 6/21/08 is $325,000. That also becomes the selling price. So the adjusted basis and the negative amortization becomes $325,000. The gain on the disposition in this example will be 0. Bankruptcy may be another solution for your client to look into. Here's another example. This is a principal residence purchased in 1994, refinanced in 06 for $200,000. However, because of negative amortization, the balance of the loan is $350,000. The adjusted basis is $150,000. So at the time of foreclosure, the gain on the residence of the sale is $200,000. However, in this case, the taxpayer did live and own the home for over 2 years, allowing them for Code Section 129 exclusion up to $500,000. The realized gain is $200,000. The taxable gain is 0. Once again, advise your clients, bankruptcy may be another solution. Here are some examples of what the chapters stand for. Chapter 7 is a complete insolvency. Chapter 11 is for businesses to reorganize debt. Chapter 13 is for personal debt reorganization. We cannot emphasize enough that we recommend that your taxpayer consult a bankruptcy attorney who is familiar with tax laws. We thank you for watching this presentation by LatinoTaxPro.org. If you have any questions, please call us at 866-936-2587 or visit our website at LatinoTaxPro.org. Thank you.